Good morning, everyone, and welcome to Morning Market Movers, where we do some live analysis for day trading and take a peek at what could be hotspots in the markets for today. My name is Todd Rich. I am with Nadex. Normally, I would have Brian Caprice from Keep Trading Simple on, but Brian is under the weather today. We saw that yesterday. So he will not be joining us this morning. That doesn't mean we still can't jump into it. It is Thursday, November 11th. It is Veterans Day, and I would like to say to all those members of our military branches, those serving or those who have served, thank you for your service. Greatly appreciated indeed. Before we jump into the markets for today, I do have to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an education session. Please do not construe anything I say as a buy or sell recommendation. I am doing this for your education purposes. So let's just take a quick little peek. I don't even think there was really any data to look at for today. I know that Australia came out with some unemployment data last night. It did lead to a little bit of movement in the Australian dollar. GDP in the UK, clearly growth is slowing down, coming out of the big boost out of the pandemic. Pound really didn't make much of a move on any of that. Where we did see some movement, though, and I'm going to jump back to the chart from yesterday just briefly. Oil is definitely in play. As you can see yesterday when we had that the oil inventory report, as traders digested it, oil dropped in price. I know OPEC made some announcements about their expectations that demand would be down, particularly in China and India. You always take what OPEC has to say with a grain of salt because they do tend to try to manipulate the price of oil. They have a vested interest. But we did see that sell-off yesterday in oil. Now, we saw a sell-off also in sympathy across the markets, but that had nothing to do with oil. That had everything to do with the reaction to that inflation data. We are going to take a peek over at some of the equity charts as well, because some interesting levels were touched. And what we're seeing this morning is after that strong, immediate knee-jerk reaction to the equity markets selling off yesterday, we're actually seeing a little bit of a rebound. And we'll see how traders feel when they get back into the markets, at least the retail trader, in about 45 minutes. But what I do want to take a look at is while oil got hammered yesterday, there was a currency that did move, the Canadian dollar, very much tied to the performance of oil. So let me jump over to the Canadian dollar. Here's the USD Canadian dollar. There we go. Thank you very much. Okay. There we have it. We saw a corresponding weak move in the Canadian dollar. Canadian dollar weakness. That's why you see the US dollar taking off against the Canadian dollar. And it really did. I mean, this has been kind of range bound a little bit for a while, and it definitely spiked higher. Now I'm going to have to go to a longer time frame to really get a glimpse at where we might see where we're buyers stepping in as support and where we're sellers stepping in as resistance. And interestingly enough, it's up around it's the 00 levels, up around 1.26. We're getting close. Certainly something to be looking for as you're looking for support and resistance levels. That certainly would be one to be paying attention to. It looks like, and now that you can see what that level means, I'm going to drop it back down to a 30-minute chart. We're trying to get there. I don't know if we're going to totally get there, but certainly something to be paying attention to after a fairly significant run up with the U.S. dollar, Canadian dollar. Again, that's all Canadian dollar weakness. Where would we start seeing some resistance? It looks like it might be trying to find it a little early, but keep an eye on that 126 level. It's going to be an interesting one. All right, so that goes along with the movement in oil from yesterday. And if you saw, oil didn't just go straight down. It was finding some support levels on its way down. But what I really want to jump over to is what everyone's talking about is the sell-off in the equities markets. Uh, I'm first going to bring up the Nasdaq because that was the one that I think got hit the hardest. But interestingly enough, that's also the one that's bouncing back the most. In the Nasdaq, this is the double zero levels, and they're usually pretty interesting levels. Brian had actually given you a couple of levels yesterday, and I know that this was the other one, the two double zero levels. With the sell-off in the Nasdaq yesterday, it blew right through the 16,000, hit that 15,900. That's exactly where it bounced. These double zero levels. It did push back up. Here's what we've been seeing in the overnight session. It did push back through that 1600 level, came back down as a confirmation and took off. We know what Brian calls that. That is actually that Harry Potter trade. If you're not familiar, I'm using his vernacular. I am going to drop in exactly what he means by that. But when you see, oh, hold on, I lost my drawing tool. There we go, point to point. When you see this move up, and then you see it do a pullback. This is what we like to see, those confirmation pullbacks. It does pull back, comes right back into that level that we had identified prior. And then from there, it took off, and that is why it's Harry Potter, because it's a lightning bolt. All right, so we have seen that, and that is a bit of a confirmation. There is some buyers now that there. I mean, definitely bad news yesterday. Clearly, inflation out of control. They're going to have to do something. We have that sell-off yesterday, and then as people are digesting it a little bit, corporate earnings have been coming out with pockets. Disney's weren't exactly stellar, but they're sort of an outlier. Most of the corporate earnings have been really strong. Now the news that you see are about the handful where they're missing. I know Beyond Meat really missed, and the stock I think is down maybe near 20% this morning. So there are pockets where individual companies aren't necessarily performing well, but the broader market with most of the corporate earnings actually coming in way beyond expectations. And so while there is certainly some ugly news with the inflation data and definitely some concerns, there's still some positivity around corporate earnings and corporate valuations as they continue to make money. The other I did also want to take a quick peek because we're seeing this in the Nasdaq. If we look over at the Dow, let's take a quick peek over at the Dow chart. A similar type scenario, not as strong as we saw in the Nasdaq, but we did have that. I mean, obviously a sell-off. What was interesting, and it's just all of these double zero levels, it actually came down to that 35,900 level. So those double zero levels sometimes become self-fulfilling prophecies. People sold off. Again, a very strong reaction in the Dow. We have found some support rolling over a little bit. But as I take a quick peek across the board for all the equities, the Dow, it's probably the weakest on the rebound. The S&P coming back. We'll jump over to the S&P chart real quickly. Nasdaq definitely leading the charge on the rebound. So for our hotspot today, I would be paying attention to that. It looks like I'm getting, I am going to take Euro USD. I know we're looking at a lot of the Forex. Let's just take a quick peek because I see it in the chat, and I wanted to. Let's see. Do we have anything moving? Do we have any interesting levels? Yeah, we did have. And this is going to be Euro strength, right? I'm sorry, dollar strength. This is the dollar strength because we did see this movement with the U.S. dollar with the inflation rates where they were at yesterday. We definitely had people giving strength to the U.S. dollar, mostly because everyone's anticipating and expecting that this is going to force the Fed's hand in raising interest rates. And while I think they're absolutely right, again, a bit of a knee-jerk reaction because the Fed has sort of told us they're not going to do anything right now. They've already started the taper. We know the taper is coming. We know they're doing it in a measured way. The question is how soon will they be forced? And I know that we've spoken about this before. How soon will they be forced to do something, or will they be able to do it on the time frame that they've sort of given us already? Although they really haven't given a lot of clarity in terms of when they would actually start raising interest rates. So while the tapering is disappearing, while the buying of assets is disappearing across all central banks, we know that interest rates are going to have to start coming back at some point. And clearly in the U.S., this is going to be one of those places where we may have to act a little earlier than others. We've seen one other place. New Zealand is the only place that's actually stepped into it. All right, with that, and without Brian, I want to remind everyone that we will not be on tomorrow morning. I'm taking a day off, and we know Brian's under the weather. Once again, thank you to all those members who are serving and who have served. If you've got any for Veterans Day today, if you got any questions, please reach out to us, customer service at nadex.com. You want to tell Brian to feel better, feel free to email him at support@keeptradingsimple.com. Real quickly, what we were covering today as a recap: oil definitely got hit yesterday coming out of those inventory reports. That did drive the Canadian dollar weaker. Also, we had that massive knee-jerk reaction, equity sell-off yesterday. Markets are trying to rebound a bit today, seeing it mostly in the Nasdaq, and definitely had some interesting levels that were hit. Those double zero levels. It's as a psychology thing, something that you usually have to pay attention to. I want to thank you for joining today. I want to thank you guys for joining every day. And Brian and I will catch you again on Monday. We will be back on Monday. Good luck in the markets, everyone.